every year at this time, I try to get the message out through the media, such as we're doing here today, that come the end of this month, December 31st, another year of eligible money will be lost to policyholders statewide. Since Hurricane Katrina, the Market of Last Resort, state-sponsored Louisiana Citizens Property Insurance Corporation, has assessed every property owner's policy insurance, both commercial and residential, in order to finish paying for the bonds. They had to issue $1.2 billion worth of bonds to finish paying their Katrina losses. And that amount of assessment is eligible for recoupment, 100 cents on the dollar, by every policyholder. But they only have 4 years in which to do that. They can still go back those 4 years, 2010, 11, 12, 13, and 14, are available to be accessed. But the first 4 years, 6, 7, 8, and 9, have now expired, and $255 million of money that could have been recouped by policyholders in our state went back to the general fund unclaimed by those policyholders. It's a very simple process. It's a one-page form, 4 questions, name, address, policy number, and the amount of your assessment on your property insurance policy. You have to attach a copy of your deck sheet, mail it to the Department of Revenue, or go on their website where there's a form available to be filled out and submitted right there through the website. If anyone needs help with that, they can contact our department here at the Louisiana Department of Insurance, 800-259-5300, or through our website, www.ldi.la.gov, for assistance.
Okay, why do you think that so many property owners are not claiming the money that's available?
That question is often asked, and it's mind-boggling, but the only answer I can come up with, because every time I take the opportunity, both at tax time, I do a statewide effort to bring awareness to this availability, and then at the end of the year, just before another year expires, I'm asked by media all across the state, why do people not ask for this money back? It's so easy, and so much of it's available. And my only response and my only belief is that they're so busy in their workaday lives, taking care of their children, paying their bills, going to work and maintaining their household, that they just aren't aware of everything that's going on down here in the state capitol. So that's why it's so helpful for media like yourself to give us the opportunity to get this message out. And every time I do it, I get stopped on the street in Shreveport or Baton Rouge or New Orleans. Oh, thank you, Commissioner. I didn't know about that. I don't know how. And they not only can do 1 year, they can go back 4 years, and not just for their home, but for any property that they have insured, commercial or residential, in our state.
What is the deadline for property owners claiming a rebate?
It's December 31st of each year. I take mine on my homeowner's insurance policy as a dollar-for-dollar tax credit against my state tax liability. Real easy to do. There's a box to check off, and you attach the form and the deck page to your tax return, and you take it as a tax credit against what state tax you might owe for the previous year. You can amend your previous 4 tax returns if you choose to do it that way, or if you happen to have another reason why you need to amend your return, you can do it at the same time. Otherwise, as with my widowed mother, who owes no state income tax, you can just fill out that, and there's a separate form for each year. That form I mentioned before with just 4 simple questions of name, address, policy number, and the amount of your assessment, and mail it in, and you'll get a check back from the Department of Revenue for that year's assessment for each property that you own that was assessed within 2 weeks.
What is the Citizens Depopulation process?
It's an annual program that Louisiana Citizens Property Insurance Corporation goes through with private companies looking to take policies out of that state-sponsored market of last resort and put them on their books, their private books. It's very beneficial to everybody in the state. If you're having to get your insurance through the market of last resort, Citizens, then by law, every year, your premiums have to be adjusted upward to keep it priced above the private sector so that the state doesn't get in competition with private insurers. So your insurance is always priced higher than all of the private insurers in your area if you're getting your insurance through Citizens. The good news is that Citizens just had another very successful depopulation program. Every year in the fall after hurricane season, Citizens meets with companies interested in taking policies out of their book of business and putting them on the private company's books. A win-win situation for both those who are insured through Citizens and the other 98+% of us who get our insurance in the private sector. It benefits those insured by Citizens because by law, as the state-sponsored market of last resort, they have to adjust their rates upward every year to keep them the most expensive in each of the 64 parishes. It's good news for the rest of us because our policies are at risk for an assessment, just as we talked about earlier, the 4% that's being assessed each year since Katrina to finish paying off that $1.2 billion bond issue that Citizens had to issue. So our exposure for such assessments is decreased each year as the depopulation program shrinks that Citizens book of business. It had gotten up to 9.8% of our premium volume. 174,000 policies, our third largest insurer in 2008. It's now down to 1.2% after this most recent depopulation and 88,000 policies. Its lowest policy count since well before Katrina hit in 2005. So as that happens, it benefits those policyholders who have to get their insurance through the state-sponsored market of last resort, and all the rest of us, as well as our exposure is diminished as their book of business is shrunk. I think our environment in Louisiana, truthfully, I think we are looked upon internationally in the insurance world as the model for how to do recovery from the worst insured loss event in the history of insurance, Hurricane Katrina. Bigger than 9/11, bigger than Hurricane Andrew, which had been the record event for over a decade. Katrina cost private insurers doing business in our state $25.3 billion in losses. We only pay $2.3 billion a year for all of the property insurance we buy as a state, commercial and residential. So that's 10 years of every premium dollar we pay, we collected back for Katrina losses, not counting flood losses. So as we have recovered, remarkably so, not with the big national carriers doing more business, they've retreated from coastal exposure up and down the Atlantic coast, from Massachusetts to Miami, and all around the Gulf Coast to Mexico. But we have been able to attract smaller regional companies, good solid companies backed up by our Louisiana Insurance Guarantee Association in almost every case. Surplus companies are not backed up in any state by guarantee funds. We've been able to attract private companies, smaller regional companies, to fill that void created by the exodus of the major national carriers, to the point where our market there's product out there available beyond what I thought we could expect to attract. And we are seeing the benefit of that with these successful depopulation programs each year.